Hey everyone, this is John Feneck with the Feneck Commodities Report, and with me today is Brien Lundin of the Gold Newsletter. Brian, how's it going?
Doing great, John. Great to be with you.
Yeah, great to have you back. It's been about a year or so since we last talked, I guess, online, and a lot has changed. Last time we had talked about gold holding that 1900 level, building that
Yep.
nice base last year. You've made a series of correct calls since then about gold's ascent, and now we're sitting here at 2400 and really hasn't broken that 2300 level very much at all. It seems to be like fresh buying every time we get down to that range, which is
hmm
really encouraging, right? So, what's your take on all this, and what do you think is the main driver here? I read you, pretty regularly, but I think what outside of central bank buying do you see that's causing this bid on gold?
Yeah, well, so far it's been the central bank buying and Chinese domestic buying, and it looks like, despite uh, their declination to discuss gold purchases, the Chinese central bank may have actually purchased gold in May and June, despite what they failed to announce. And in fact, according to some research that's just been out by Jan Nieuwenhuis, that they may have bought it at accelerated levels in May and June. So
Hmm.
that's been buying so far. What we're about to get is the Fed pivot, which was the big catalyst that we thought we were going to get at the end of last year, when the market thought that there were going to be 5 rate cuts this year, beginning in February or March. That kept getting postponed month by month by month. And considering that, you would have thought that gold would have lost $200 in price. Instead, it's gained about $400 to $450 in price before that Fed pivot actually comes into play. And now all the markets are starting to price that in. So therefore, the impact on gold is going to be from a far higher level. It's all been quite sudden, quite extraordinary, in some aspects, really unprecedented for the gold market. And I don't think the markets have really come to digest that, or appreciate it. We've got a lot of companies out there that are have yet to be repriced to the new gold price environment. I mean, I was talking to somebody earlier today. If you look at companies when in their pitch decks and you see their PEAs or PFSs or even feasibility studies, and look at the price sensitivities that they have, nobody ever predicted, at the top end, what if gold gets to X price? What will the economics be? Nobody included $2,400 on those projections, much less $2,500. And yet we're there, and nothing's been repriced, or at least not significantly. So I think that's going to be happening. I think that that re-rating across the board is going to happen once the generalist investors come in, and I think they're going to come in on the basis of the Fed's move to easier money as opposed to rate hikes.
Yeah, great information. I mean, just along that line, um, I think part of the reason we haven't seen the Newmonts of the world catch a bid like they had in 2011 through 2013 is because of the distraction in the market, right? Bitcoin has
Mhm.
done their ETF thing a few months ago, which was huge. You've got tech and AI just cranking. Obviously we've seen a pullback, and I will say that it seems like since the Trump assassination attempt, I've been tracking tech pretty closely, and it's really struggled the last 14 sessions here. We're recording this 14 business days after that, and it
Yeah.
really has struggled as a sector to catch a bid, which I think we may have put in a top in the market right there. Because
Mhm.
there's just a contingent of people that are like us that are saying the world is not really as safe as you
Yeah.
think, and you need a security blanket. You need to hedge your portfolio instead of just having this huge amount of risk exposed. I mean, it's amazing to me how many people, smart people too, that are just taking a massive amount of risk in their 401ks
Mhm.
and their retirements 15 and a half years into a rally. I mean, don't you think that's ludicrous?
Yeah, and to some degree, and there are lots of other. I like the way you put it, distractions, because there are other ways to get leverage. There are certainly a lot of other speculations out there. Crypto has stolen a lot of the speculative fuel from gold market and mining stocks in particular. And there are other ways to get leverage on gold these days than there were in the early 2000s, the last really big bull market we had. But all that said, we don't have to have much of that speculative capital flowing into the gold sector to have really an extraordinary effect. While there are other ways to invest, there's just a many times larger pool of capital today as opposed to the early 2000s that
Yep.
is out there sloshing around the world's capital markets looking for places to drop in. And if we get just a fraction of a percentage of those capital flows into the metals and mining markets, which are just minuscule compared to these other sectors, then it's going to be explosive. And I think we're going to get that.
Hmm.
Because you can't ignore the kinds of cash flows that the big miners are reporting as we speak. Um, and it's going to happen. And again, the theme that's going to dominate now is one of Fed rate cuts as opposed to Fed rate hikes. Gold gained 700, $750 from trough to peak during what is arguably the harshest rate hiking period in Federal Reserve history.
Hmm.
Um, so what's it going to do when we get to the other side of that curve into rate cuts? I think it's going to do even better.
Yeah, that's a great analysis. And to answer your question, I mean, you and I and Rick Rule and a few others have been pretty outspoken about it's not going to take a lot of capital. Like, I mean,
Mm-mm.
when you add up all of the gold stocks you could name out there, literally, it's 0.1% of the investable capital and, the overall market. I mean,
Yeah.
technology by contrast is over 40% of just the S&P. I mean, it's not even close, right? So if we go from zero point 0.1 to 0.3%, I mean, it is going to be a massive amount of influence, something like Newmont, Agnico, some of these top names. And when you look at the earnings of some of these companies, I mean, it was interesting to see on a really bad day for the markets today, Newmont finished up. Agnico finished down about 1% on a back of a really good earnings report, which saw,
Mhm.
ASIC of under 1200. I mean, like just the easy math. If you're at 2,400 gold and your ASIC is 1,200, I mean, you're just printing cash, like you
Yeah.
had said. I mean, the free cash flow potential of these companies is going to get noticed by the street. It's just going to take a little more time.
Yeah. And the big gold producers over the last 10 years or so figured out that they weren't getting the kind of attention that they deserved or wanted from the broader investor sector. And so they started changing tactics and delivering dividends. So they have kind of a built-in fail-safe now. They have that mechanism. So if they don't get share price appreciation, or they'll just declare a tremendous, extraordinary dividend and promise more down the road, and that will get the market to wake up. If you can't get the speculators to take notice of you, in other words, then you get the value investors to come in.
Right.
So I think they have a carrot and a carrot approach to getting the market's attention.
Yeah, that's interesting. I'm a big believer in the dividend, theory as well. I mean, just paying even 1 to 2% is something to a value manager.
Yeah.
Newmont, obviously, a lot more rich than that, but yeah, I think we're headed into the to a really good period here for gold stocks and silver stocks for that matter. So let's pivot over to silver. I worked on the silver team briefly at Sprott, and I've been buying silver coins since year 2000 when I was getting pummeled in the tech market. And I went to my broker and I said, "What can I do to protect myself?" And he said, "Buy physical silver and gold." And that's
Hmm.
all I could afford back then, right? But that was at like $8 or $10 an ounce. So I've had a really good experience with silver, unlike some. But I've been very measured about silver. I mean, I was probably interviewed, 30 times last year, and I said probably 20 times, "Hey, silver's not going to break 26, and here's why." Like, I really believed that silver was going to struggle all year, and I feel differently this year because we broke through that magic number of $30 an ounce with authority. And
Hmm.
even though we've retraced, back below 30 now, I think that was really, really important because that was major resistance for 11 years.
Yeah, it from a technical aspect, it looks like silver's poised to rise. And I just lean on the simple fact that in a bull market in gold that's based on monetary concerns, which in fact is any longstanding bull market in gold is based on concerns over the depreciation of currencies. And that's where we are right now. So this is that kind of a bull market. In every previous situation, silver has dramatically outperformed gold, and I think it will continue to. I don't give much credence to the arguments about silver's industrial usages. I think that when you talk about silver as an industrial metal, it's not to its advantage, it's really to its disadvantage because it just gives the speculators a stick to beat it with when you have signs of a recession or a slowdown in China or something else. It's never a reason to buy silver, but it's often a reason to sell silver.
Yep.
And in fact, the vast majority of silver's value is as a monetary metal. Now, that said, that's starting to change a little bit. I'm not that excited about it because I do think that silver's monetary factors would always overwhelm industrial usage. But over the next 5 years or so, we're going to see solar demand for silver actually outstrip annual silver supply. So I think at some point those numbers will matter. I think it's a bit in the future, but silver is a natural lever to gold. And if you want leverage to that move in gold, then you buy silver. If you want leverage to silver, you buy silver stocks. And that way you layer leverage on top of leverage. And I continue to believe that's a great way to be, especially at this point in the market.
Yeah. So how do you go about assessing say a silver stock, or are you looking, how do you look beyond management and kind of kick the tires to see, this might be something you'd buy?
Well, if you're going to attract the silver bugs into people looking for leverage, you want to have something that has a lot of silver, fairly good grade, um, and no real impediments to production necessarily. Or easy way is to follow Eric Sprott. He's an ultimate silver bug and he likes big silver. So if he likes something, it's a good place to go. That said, there are some silver plays that Eric likes that are huge resources but lower grade. Therefore, they're optionality plays on silver. And I think those will be a little further down the line, before the market gets around to those. But, interestingly, those kinds of optionality plays in gold have suddenly, over the last couple of months, transformed from out of the money plays into the money plays. And that's another area I don't think the market has really re-rated things appropriately. So I think the silver stocks are a little further away, and I think some of the optionality gold plays are the place to be right now. Um, and there are some exploration plays out there, but judging and analyzing a silver play, management's always key. Size and grade would follow right after that, or
Okay.
alongside.
Okay. Yeah, and I would add jurisdiction
Yeah, yeah,
because obviously we've seen crazy things happen in Peru, Mexico, some major markets for mining in the last couple of years, and that's been derailing some otherwise good
yeah.
stories. But no, that's helpful. Are there any names that you're, liking when you talk about gold optionality that you don't think have been uncovered yet?
Yes, there are. I mean, I think Banyan gold is great because it's got a huge uh, gold resource. I don't think it's going to be re-rated in the very near future because of what's going on with Yukon, and it's somewhat closely associated Victoria Gold with that terrible accident on the tailings pond or
Right.
tailings containment. And so I think that's done two things. It's put Banyan at a discount, which is something you can take advantage of. But I think it's made it a bit of a longer term play until all of that gets settled out somehow. There are some other plays out there. In fact, I just recommended one in Gold Newsletter that went out a couple hours ago. So I
Okay.
don't want to necessarily, I really don't
Mention
want
that
to
just
mention
yet.
that right now to my readers. I've had a chance to jump on board. But that said, anyone can subscribe to Golden Newsletter and find out what it is. But it is one of the preeminent optionality plays out there, if not the preeminent one, and a name people will recognize. But it's an example of how we think about these companies and say, man, if gold gets up to $2,400, these companies are going to be worth, a king's ransom. And here we are. And
Hmm.
yet the market has been very slow to re-rate these companies according to the new environment. And some of that's disbelief that we're here and that we're going to stay here. I think we're headed higher. So uh, some of these plays are now not only economic, but they show very good numbers, and they're actually achievable. I've actually got two or three on my short list. So we shot one bullet this month, and we got a couple more in the chamber for the next couple of months in Gold Newsletter.
Good. Can you tell our viewers about Gold Newsletter and how they may be able to subscribe for free or pay?
Yeah, they can get a sample issue for free at goldnewsletter.com. More importantly, I think they can get a copy of our Investor's Guide to Gold and Silver, which is an objective 40-page report, covers every aspect of precious metals investing from soup to nuts, and tells you what are the best newsletters out there, what are the best conferences to go to. Of course, my newsletter and my conference are featured prominently, but it is
Sure.
objective. And I do tell people very frankly what the best other newsletters and conferences are. So yeah, go to goldnewsletter.com. You can subscribe there. Gold Newsletter is not only the longest running precious metals advisory in the world, I think it's the oldest newsletter in the world, investment
Hmm.
newsletter in the world. We're in our
Wow.
54th year now, so we've been around a while. Um, and yeah, so I think it's a great value. We had a takeout just now with Philo. That was an 18 times winner for us. We were the only newsletter to recommend that pre-discovery. So that's a feather in our cap. And we miss a few, but we get a few too.
Yeah, absolutely. I mean, you and your organization have been doing this longer than I've been alive. So it's amazing. It's great to have you on. And while we're talking on the conference side, I mentioned to you that I got into the conference business, I guess last April, this
Hmm.
April, excuse me, with getting into the critical minerals side
Yeah.
in Washington D.C., and that helped a lot of CEOs meet, people from the DoD, DOE. I think it was a really good time, and now I'm doing something in Florida in October, down at the Four Seasons Fort Lauderdale, October 20th, and then you have your conference in New Orleans, which has been running for many, many years in November this year.
Yeah.
Can you tell us a little bit about that?
Yeah, it's actually the oldest or longest running investment event in the world. This is our 50th anniversary. All of these things for Gold Newsletter and the New Orleans Investment Conference were started by a guy named Jim Blanchard in the early 70s. And I worked for him from the mid 80s on and ended up being his business partner. Then he passed away in 1999. And now I own and run everything and try to continue that legacy. It's this fall, the New Orleans Investment Conference, 50th anniversary, November 20th to 23rd. We have what I think is the leading best roster of experts you'll find anywhere. We've got Jim Grant, who only speaks at our event these days, other than his. We've got George Gammon, Brent Johnson, Jim Iurio. I'm going off of memory here. Rick Rule, of course, Peter Bookvar, Peter Schiff, um, uh, uh, dozens and dozens and dozens. James Lavish, Lawrence Lepard, Lobo Tigre, Mike Maloney, um, Robert Prechter, Tavi Costa, Tracy Schuchart, just goes on and on and on, and dozens more. And we're still adding to the roster. So it is, I think, the preeminent event for people who are interested in geopolitics, macro, all the individual markets, and really top level independent and objective advice on the markets. plus about 90 or 95 of the top junior mining companies around today. So it's a great event, and our 50th anniversary, we're blowing the doors off this year. All the cool kids are going to be there, and I urge people to come on and join the fun.
That's great. Well, New Orleans is a wonderful city. I've been going there for the Jazz Fest for 20 years, being a jazz musician on the side, and I've made it to your event now twice, and it is fantastic. We really appreciate you coming on, Brien, and talking a little gold and silver here, and hope to have you on again in a few months.
I appreciate it, John. Thanks so much. And next time you come down for Jazz Fest, let me know. That's the best thing New Orleans does next to my investment conference. So it's a wonderful event.
It really is. In a world of $1,000 concert tickets, they still have a very grounded approach, right?
Yeah, they really do. It is the best thing the city does.
Excellent. Well, thanks a lot, Brien. It was nice to see you again.
Thank you.
All right, take care.